All right, bonuses are out of fashion with lawmakers. You know that. But banks say they've got to pay them or lose their top talent. Credit Suisse gambled on a unique solution to compensation, and it seems to be paying off. This is an interesting one. Our Margaret Popper has that story. So, Margaret, tell me exactly how this works.
Well, Carol, you might call it eating your own cooking. Credit Suisse dumped a bunch of distressed assets into its bonus pool. The assets are commercial-backed, mortgage-backed debt and leverage loans, the ones that were used to finance outsized buyouts. The pool totaled $5 billion at inception. Since January, it's up 17%, says a person familiar with the plan. Well, the plan was put in place at the end of last year and applies only to the two most senior rungs of Credit Suisse employees. About 2,000 workers received letters about the return, said the person familiar with the results. Well, the return is far lower than the employees would have gotten if they'd received Credit Suisse stock, which is up about 86% so far this year. CEO Brady Dougan's comment when the plan was created back in December, quote, "While the solution we've come up with may not be ideal for everyone, we believe it strikes the appropriate balance among the interests of our employees, shareholders, and regulators." Credit Suisse has distinction among the world's top banks for not taking any money from its government in this crisis. In December, the bank announced plans to cut 5,300 jobs and canceled bonuses for top executives. On July 23rd, Credit Suisse declared second quarter profit of the equivalent of $1.47 billion, a 29% increase from a year earlier. Revenue from trading stocks and bonds doubled in that period. Dougan said the bank has won market share in several key trading businesses, including cash equities, high-yield bonds, and foreign exchange. It'll be interesting to see how employees in those areas feel about owning less of the firm's stock, Carol.
Gotta admit, it's an interesting strategy, right, Margaret?
It is.
All right, Margaret Popper.